and welcome to today's update. Now today I'm going to talk about the year in review and a little bit about what is in store for next year. When we look at markets over this last year, first of all, well done. It's been a tough year for all investors. You've had to be really disciplined, patient, and really trust the process during this year. Because what we've seen is this, the start of the year, this huge volatility. This is the Australian market, all ordinaries, which ends up being the best performing market for the year. The Dow Jones, the top 30 stocks in the States, and the NASDAQ in the US. And what we've seen is this huge volatility. Start of the year was a bit nervous, and then a huge dip around June, July. And many investors were thinking, wow, this is going to be really, really hard to hang on. And what's going on? And the press at that time obviously really ramps up the fear and the talk of recession and wars. And for all investors, particularly retirees, that's a really nervous time. And then what we saw is unexpectedly, because everyone at this point in time, all the, I suppose the experts in the media were saying this is going to get worse and worse and worse. And what happened? The markets turned around, and the Australian market's been up around 15% since July. So for the year, the Australian market might end up slightly ahead. At the moment, it's just down slightly. So if you had the blinkers on, didn't know this was going on, you'd look back and go, oh, it's not such a bad year after all. But certainly around here, during the middle of the year, it was pretty tough. And we've seen the major indices up higher. The NASDAQ, which is the technology company, is still a long way behind. So as we go through things, as we look at what's been going on, we look at some charts and some interesting charts here around the history. And we know this, that over time, since 1900, this is called the Wall of Worry. This is an article by Shane Oliver from AMP. He writes some really good pieces. We'll share this around. But it talks about all these things we've been through over time. And this year, again, more and more things to worry about. But over time, we know the long-term story is that over time, investors get rewarded, but it is difficult to hang on in these years. It is difficult to see what's going on. And it really reminds me of some of our 10 principles that we often share. And the two key principles this year have been number 8 and 9. So managing your emotions. This roller coaster ride of being nervous when you see bad things in the press. Do I hang on? Have I got the right strategy? And then looking beyond the headlines. The media is great. We rely on it. We read a lot of things every day. We're opening up the news. It's around us everywhere now, on our phones, constantly getting alerts. But we've got to remember that what sells headlines is not necessarily what's the right thing to do for your portfolio. It's hard to keep that in context, but it's really important that we keep that in mind. So I'm just going to swing around now to a few charts, because this is it's a story I've told before, but it's one that is so relevant to the year that we've just had. So I've got 3 portfolios here. This is portfolio 1, maybe. This is the second chart, and the third chart. And most investors will look at these 3, and they'd probably say, well, I don't want this one. This is my money going down, and that doesn't look like much fun. I don't want that portfolio. This one's not too much fun either. They might think, well, that's just cash. And this, of course, everyone wants that portfolio. So what we've seen this year is that the reality is that this is all the same portfolio. It's just time frames. So this is just a short term. And that's what's happened this year. June, July this year, everyone was down. Didn't matter where you invested, everyone was down. Tough times. Number 2, that's a sort of medium term. Sometimes you get a flat year like this year. And for 1 year, we're pretty much looking at probably flat results, maybe slightly negative, but pretty flat. Again, not that exciting, but it's flat, but it's better than number 1. And number 3, well, we all like that. That's your longer term picture. And all portfolios over time, we've seen this now, been doing this for 20 years, the data goes back 50, 60 years at least. We know that this happens, but what we're sort of, I suppose, looking at this year is that that's what's happened. We've seen this downturn, we've seen it move to flat, and we haven't seen that, and that's tough, especially for newer investors, but even investors who've been around for a long time. This isn't much fun, so again, well done. As we move into the new year, we'll be having lots of reviews, especially around this December time. Please reach out. A couple of weeks until Christmas, we're still here. The office will only be closed for a week or 2. But again, well done for hanging on to this year. It's been one of the toughest years for investors for a long time. If you do want to talk about it before the break, we're here. If not, we'll be looking forward to catch up in the new year.